Hello and welcome to the Soluna Holdings Fiscal Year 2023 Results and Business Update. I'm John Belizaire, CEO of Soluna Holdings. Before we begin, I'd like to start with a legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one, and our goal is to share with you some of our strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with our shareholders. We operate in a hyperdynamic environment, and that's a fancy way of saying things change quickly. What we are telling you here is based on our estimates and assumptions, which are our best guess, and we reserve the right to advise or revise our point of view based on our new information and changes in the business environment. Despite an uncertain, dynamic environment, we must plan and make operating and investment decisions, and this presentation lays out some of that for you where appropriate. And here is the legal disclaimer and disclosures. Before we jump into the results, I also like to take you through a company overview. I always like to remind our current shareholders and explain or share with our new shareholders about the business we are in and the opportunities ahead. Soluna develops data centers that are co-located with renewable power plants, turning their wasted energy into sustainable computing resources. These sustainable computing resources are then used for Bitcoin mining and other high-performance computing applications. What's most important to understand is that this wasted energy concept is actually a major problem in the renewable energy space. In fact, up to 30 to 40% of the power in most renewable power plants, wind, solar, hydro, goes unused or wasted. It can't be monetized for a number of reasons related to the grid's resiliency and flexibility. We solve that problem by developing these modular solutions that can be placed at these assets that convert this stranded resource into a host of different global resources, specifically computing for things like Bitcoin mining or other high-performance applications like AI. The power partners that partner with us at our projects do so because they notice something very unique about our team, the makeup and architecture of our company. And what they see is four key pillars of expertise. One is we are great with project development. We understand the nature of renewable energy project development and data center project development. And they understand that we have a clear plan and approach to deploying the solutions that we're going to place near their assets. We understand energy markets. We understand how those are developed, what are some of the challenges, how they're financed. And so when we're talking to each other, we're speaking the same language. We're savvy in computing technology. They don't have to understand data centers or computing technology. They look to us to determine how that can be placed and integrated with renewables. And they can see that we've built a very robust computing platform that can allow these data centers to integrate with these power plants. And then finally, we understand project finance. As I said, we understand how these projects are financed, how they're structured. And so the way that we structure our PPAs and power purchase arrangements really take into account the different constituencies involved in those projects and allows us to structure a deal that can work for both sides. Now let's talk about how we source our power. We source our power for our data centers in three different places. Because we are integrated into the same power plant and same substation as that power plant, it gives us access to three important sources of energy. At the top, you can see curtailed energy. That's the energy that would otherwise be wasted. We buy that at a fixed low cost because otherwise that power is stranded. Subtractive energy is the power that would otherwise have gone to the grid if our load or data center weren't there, and we pay for that power at the location, the node where our data center is located, at the price at that location. And then grid energy we buy when the power plant is not big enough to support all of our needs. We buy that power at wholesale and pay at the load zone price with the additional adders and charges. The beauty of this design is it allows us to use our advanced software technology to essentially optimize the source of the energy at any given time to bring our average weighted average power cost down to a level that is the best in the industry. Now, the question you might ask is, how does this solve the wasted energy problem? So we build a data center co-located with a power plant. We have this sophisticated way of sourcing our power. How does that all result in a solution for the power plant? Well, this depiction here helps you to see that. On the far left, you can see there's a 150 megawatt wind farm. The red bars are showing you essentially the percentage of energy that's curtailed over time. So this one was launched in 2016. And as you can see, through 2021, it reached over 40% of its energy being curtailed. In fact, we saw a much higher curtailment level this past year at the location. And then if you build a 50 megawatt data center there, you can see we cut that curtailment in half, because energy that would otherwise have been wasted is actually being absorbed by our data center and converted into computing. If we built a facility 3 times the size, to 150 megawatts, or the same size as the wind farm, we would virtually eliminate curtailment. Because our load is there at that location, it essentially finds a source or a user of that energy that can monetize it right at that location. That's the process or thought that we've come up with to solve this problem today, not tomorrow, where there's a need for batteries to be much bigger and store energy, or to move that energy across power lines that take decades to build. So in effect, our data centers are like productive batteries. We place these facilities at this location, they absorb the power, and they're designed to be incredibly flexible. We can make the data center as large as we need to, or as small as we need to optimize the cost of our power, the availability of power, and also deliver a value to the grid. And you'll see how that maps into our revenue model in a minute. But the essential key point is we purposely built these data centers from scratch to really serve as a powerful system for absorbing that energy, integrating it, and converting it into a global computing resource. And so the behaviors that you see in our facility are around that efficient conversion. At Soluna, we build more than just physical things. We're actually building very advanced software that can control those data centers. Those data centers I just described that are large, modular, scalable, integrated with power resources, and integrated to the grid are controlled and managed by our proprietary software known as Maestro OS. It is our force multiplier. Essentially allows us to control the facilities, enabling us to create that flexible behavior of scaling them up and scaling them down. We read every piece of information about the facility, collecting data over multiple different time periods to understand how to optimize that facility. So we read signals about the power management, the actual machine's temperature and behavior, the power flow and thermodynamics of the building, everything about the power resource in that local area, how much power is being produced by the wind farm, how much power is coming from the grid, what are the grid prices at this specific time. For Bitcoin mining, we're looking at all sorts of metrics on the Bitcoin network to optimize the facility. And for projects and future workloads like AI, we'll be looking at how large those language models are, looking at what that looks like from a workload perspective and when the customer wants to complete that workload and the cost and timing of that. That's all made possible through the combination of our physical facilities and our proprietary software platform. Now, when you put all of this together, our data centers are cleaner and greener than the standard data center facility or traditional data center out there. That's why we designed this whole approach. We wanted to create data centers that can be placed at these facilities. We wanted to rethink the way you build data centers and how we can create a new infrastructure to support the future of sustainable computing. We recently had a study done that found that our data centers are 18% greener than typical data centers. And that's made possible by where we build the facility, how we build the facility, and the fact that it has this flexible nature. And if you compare our data centers to a standard crypto data center, we're actually almost 40% more green than those facilities because of the nature and approach that we take to the Soluna data center design. So now you know we're a digital infrastructure company. We're building physical data centers that are greener than most data centers out there. We integrate to renewables. We've developed a whole unique way to do that. How do we actually make money? There are 4 ways we make money. And we specifically have designed these 4 segments, if you will, to maximize our ability to monetize these assets. And every year we're trying to expand throughout that quadrant and make all of those quadrants blue. The last year we've been able to get to 3 quadrants, going up from 1 that was primarily focused on proprietary Bitcoin mining in the top left there. That's where we buy Bitcoin mining equipment ourselves or through joint ventures, and we mine Bitcoin, sell that, and turn that into revenue, and we provide all of the managed infrastructure services for that. The second is bottom left, hosting for Bitcoin miners. This is where third-party machines are hosted at Soluna data centers. We primarily focus on large publicly traded companies that need access to our hosting assets, our best-in-class power prices, etc. And we provide managed infrastructure services to those folks. On the top right is a new addition this past year in 2023 and into 2024 is grid ancillary services. As I talked about earlier, we're able to create this flexible behavior with our data center. Well, that behavior actually is a powerful asset for the grid. When the grid needs energy in emergency situations or in other congestion environments, we can actually scale up or down the facility to provide demand response behavior for the grid. And there we're essentially compensated to be this resource for the grid, and we're paid on a $1 per megawatt hour basis. Then the last area, which is a future revenue source for us, is high performance computing, or more specifically AI. AI is a huge opportunity, and I'll talk a bit more about that in a minute. But essentially, our goal there is 2 ways to essentially develop and deliver GPU clouds, or what is becoming known as AI factories for the market, and also hosting advanced equipment or GPU servers for customers that are looking to do everything from model training, tuning, to inferencing, and I'll explain what those are in a minute. But this is the 4 key areas where we make money. This whole process comes together in what we call the Soluna way. We source the low-cost power from power plants from IPPs. We build and operate these data centers, and we design them to return all of their capital in 2 years approximately. We attract customers for both the Bitcoin or HPC or AI customers into those facilities. We provide ancillary services to the grid, and then we use that revenue and profit generation to actually grow our assets under management, essentially spreading that across a fixed set of costs and assets. And we use that excess profit to grow our pipeline, find new areas to develop sites and data centers, and then we start the loop again. So if you follow that clockwise, you see that is a virtuous cycle that essentially feeds the growth of our business. Now, if you look at that virtuous cycle, that Soluna way, the flywheel, if you will, the key is to keep growing the assets under management, finding these renewable resources, and then finding ways to monetize that energy through a host of different computing markets. The next frontier for the company is in the AI space. There's no question about that. But I think what I haven't spent a lot of time sharing with our shareholders is the opportunity for Soluna to become a true platform for powering the future of sustainable AI. We have all of the makings for really delivering a sustainable infrastructure for scalable and sustainable AI compute. That's because AI is becoming probably one of the fastest growing areas in the computing space. And what's interesting is it has a problem. It needs more energy than any other compute that's ever happened, and it needs more sustainable sources for that energy as much as possible. And so guess what? Renewable energy has a wasted energy problem. So if you integrate those 2 worlds, you have an opportunity that is uniquely designed for Soluna. And that's the area that we're going to be expanding to in the coming quarters in 2024. So why is that? As I said, AI is probably the fastest growing technology today. GPT, provided by OpenAI, got to 1 million users in 5 days compared to some of the largest companies in the world at this point. And as of this recording, I believe it's approaching 200 million users using the OpenAI GPT platform. And OpenAI is not alone. There are a number of different platforms and AI labs that have been formed and growing at rapid rates. And the reason is because we finally have found a technology that allows us to leverage vast amounts of data, process it at a beyond human scale to find insights that can help us to grow business, expand services, etc. And that's what's driving that. And there are also new tools that have helped to democratize this advanced technology that is 50 years in the making, that is now making it available to the broader market. But like everything, AI has challenges. It has 3 main ones that we believe we are well positioned to address. AI is hungry. AI computing energy is dense and space needs exceed current hyperscale data center capabilities. The energy for demand for AI is projected to exceed the entire current data center levels. Some people put estimates in the 20 to 30 gigawatts, and I've heard mention of about 5 gigawatts of need just this year alone. AI is thirsty. Traditional data centers, particularly that utilize AI, exhibit a substantial water consumption. In fact, Microsoft used an estimated equivalent of 2.8 million glasses of water to train GPT-3 due to the current cooling design of those data centers. Most of them use evaporative cooling, so they have to pull water out of the ground, evaporate it, because it's a great way to reject energy, thermal energy. And then AI is also dirty. So traditional data centers are responsible for, we're calling 2% of overall U.S. greenhouse gas emissions. So if you look at things like GPT, Gopher, Bloom, Op, they all have more than 900 tons of carbon emissions. This is all pretty significant. And what can be done about this? Well, if I can quote Alexandra Lucioni from Hugging Face, one of the largest platforms, if you will, for pre-trained models, his point is that using renewable energy or renewable grids for training neural networks or large language models is the single biggest change that can be made. In fact, it can make emissions vary by a factor of 40 between a fully renewable grid and a full coal grid. Now, if you look at the life cycle of AI, it turns out that Gen AI is a batchable process. There are parts of the Gen AI life cycle that are perfect computing applications for co-location renewable power plants because they're inherently batchable. They can be paused. You can batch them into different groups. And so if you look at the first 2 parts, training, which is where you're creating a model from scratch and learning from large corpuses of text, this phase requires the largest number of resources, and GPT was trained on 10,000 GPUs or something like that for 15 days straight. And so if you're off for a little bit, it doesn't make that much of a difference. Fine-tuning, which is a pre-trained model, is trained further on a smaller task. So it's taking a model that was trained to, look at cats, and it might be trained then to look at and tell you your set of cats that are sort of in a particular environment. And this is great because most enterprises are probably going to be using pre-trained models to target them around their processes. For example, a law firm might take a model that's trained around contracts to look at some of their contract models for businesses of different segments, etc. And then last piece is inferencing, where you're actually using the pre-trained model to generate predictions or outputs based on input data and things like that. Our key goal is to take that full AI lifecycle and build data centers that are integrated with renewable power plants that can support that full lifecycle. That's something we're calling Helix. It's a new data center design that we're going to be developing that will be deployed and co-located with the power plants, and we're going to start with Dorothy. We have a Helix facility there integrated with Dorothy 2, And the beauty of it is that it's going to be designed specifically for AI. It'll have an advanced cooling system. It'll be more green than most facilities, a plug-and-play design, so we can start with a few megawatts and expand from there, so highly scalable. And the most important part is we will use a lot less water than most facilities out there. So we're pretty excited about this. Stay tuned for more on this as we build out this strategy and in execution this year. Now, why is this important? The reason it's important is because if you look at the AI market right now, the biggest challenge when we went to GTC 2024 this year, after Jensen's speech and you listened to the floor, what you heard was power, power, power is the biggest challenge. How do we get access to more of it and get access to more renewable sources? And what's amazing is we've got a huge pipeline. We've got over 2 gigawatts of projects in our long-term pipeline. We're unlocking hundreds of megawatts of it every year. And if you go through the traditional data center routes, it's very hard to get access to power. It can take years to develop those resources. And so that's the most exciting thing that we're able to leverage. What we've been building over the last 5 years is a model to unlock stranded energy and convert it into computing. And so that's what's going to put us, have us be well positioned for the opportunities ahead. Okay, so we have 75 megawatts of that pipeline operating today, 25 at Project Sophie, 50 at Project Dorothy. Our goal is to energize the second 50 of Dorothy, bringing us up to 125 megawatts by the end of this year, early next year. And we have Project Kadi that's underway and in development, adding another 166 megawatts of operating capacity or assets under management for the company. And of course, we've got the extended larger pipeline underway as well. In the downloadable portion, I take you through each of the projects and their status, power cost, scale, who the partners are in there. And I take you through our broader operational metrics as a company, which I think will be important when you look at the Bitcoin market and our AI expansion in the future. So please be sure to download that as well. Okay, let's get into the financial results for fourth quarter 23 and fiscal year 2023. You now know what we do as a business and how all the different elements come together to create a company that can take advantage of a number of opportunities ahead. But let's look at where we've been over the last 18 months. The results that I'm going to go through are really a culmination of 18 months of incredible execution by our operating teams. We've delivered record revenue here, project level profit, all been a direct result of our flagship project, Dorothy, coming online. And the new architecture of our business model, which has been aimed on really diversifying our revenue, as I pointed out before when I talked about how we make money and how that has evolved and expanded over time. And we also, folks ask me what 2023 has been like, being in the CEO seat. And I said it's like steering a ship through turbulent waters while simultaneously rebuilding the ship to sail toward new horizons. 2024 really presents a number of opportunities for the company. I am honored to lead a company with some of the most resilient people in the industry. And I'm grateful for the patience our shareholders have shown and the support of our financial backers and, their ability to continue to provide support for us. So, we've got some work ahead. We ended 2023 in a much better footing. And I think what you're going to see in these numbers is that our business model works. We've proven that it does work. We can integrate data centers to renewables to create greener versions of them, more profitable versions. And we're really focused on growth. And it's great to be focused on growth again. As a reminder, last year we had a 4-point strategy for execution. The first was energize Dorothy, get our flagship up, restructure the project to unlock some capital to allow us to get the company through these turbulent periods, put some strategic hosting partners in there, pivot the business model into these other areas. The second has been focusing on cash flow management and cost reduction at all different levels. You're going to see the fruits of that. focusing on expanding our flagship. We've been doing all of the legwork to double the size of Dorothy and start the construction and expansion of that project in Texas. And of course, we've been focusing on growing our pipeline. Remember the flywheel that I went through earlier. As we grow assets under management, unlock power, that creates opportunity to monetize that power, invest in that power, grow that, and then essentially cycle that revenue through to allow us to build a larger and more profitable company over time. And you'll start to see how all that flows through our financials and builds an impressive company going forward. I want you all to read the 10K. It's a new and improved version of this key document that walks through our business. For the time that I've been CEO, I've heard folks telling me how challenging it is to read our K. While it provides all the factual information, it is hard to really understand what we do as a business. And so the team and I took some time and essentially went from scratch. We rebuilt the 10K to really focus on streamlining the business overview section. We've expanded some key areas to give you more insights into the opportunities, the risks, the way our business is architected, what our different segments are. We've also added key tables to help you understand our assets, where our facilities are located, the types of business model that they're focusing on, how we source our power, and a lot of what I went through in this deck. We also added a more expansive industry trends section, and we included a new and improved table that helps you understand what are the headwinds for the business, what are the tailwinds for the business, things that can impact the company. And what you'll find is that we have a combination of both, but net we're heading in direct directions, and there are a lot of things that are working in our favor right now. And we also provided you a look at the adjusted EBITDA by quarter. That's a key insight that gives you information about the financial aspects of the business. And of course, we also show you gross profit by site in there as well. So definitely download that and take a read. If you read it before, I encourage you to read it again. It gives you a lot clearer picture of the business, who we are, and why our business is beyond just Bitcoin mining and represents a host of different future opportunities. Okay, let's take a look at revenue quarterly for fiscal year 2023, and you're going to see some incredible improvements in the business here. The first thing you'll see is that fourth quarter revenue in 2023 exceeded $10 million. And what you also see is that total revenue for the year was over $20 million. Fourth quarter revenue 2023 was the highest in 8 quarters. Fourth quarter 2023 also improved about 75% over the third quarter, or almost 390% over the second quarter. So as you can see, we made a significant shift in our business as we started the re-architecture, moving away from our old traditional businesses. By Q1, we had jettisoned the old MTI business. By Q1, we had begun to divest ourselves of older equipment, decommissioning some of our sites, and really focusing on the key areas and assets that were going to drive the growth of our business going forward. You know, the revenue mix, as we've been talking about, continues to shift and reflect in the site models, hosting versus prop mining or combination of the two, adding ancillary services. So if you see that blue area there, we saw the first revenue recognized in the fourth quarter of 2023 for ancillary services, and we'll continue to see that flow through our financials throughout this year as well. Sophie converted from 100% Bitcoin or proprietary mining facility in 2023 to 100% hosting, and we constantly optimize the facility and probably have some of our most profitable projects and customers in that facility. And you know, as of the recording of this, we also added an AI customer in that facility. That's not reflected in here. This is 23, but in 24, you'll start to see that revenue flow there as well. So this is just a fantastic look at the business. You know, if you look at the full 2022-23, you see a major shift in the revenue mixture, and the growth trajectory of the business. One key point in the previous slide is a lot of that momentum, if you will, in growth and that revenue was driven by the growth and deployment and execution around our Project Dorothy project. Now, in addition to the revenue growth through 2023, we also lowered our cost of revenue as a percentage of revenue, and we improved the gross profit. So if you follow that gross profit line there, you'll see that the trajectory is incredibly positive from the first quarter into the fourth. Gross profit increased to $4.3 million in the fourth quarter of 2023. So again, what you're seeing is a shift in the business, growth in the business. It took us some time to turn the boat, if you will, and redirect it in the true growth path for our company. This is a look at our operating costs. We talked about cash flow. Cash flow is one of our core focus areas for the business, and it helped us essentially to zoom in on areas where we can do optimizations in the past year. The net result is a 20% reduction in our G&A cost throughout the year, or $3.8 million. And G&A spend was $15 million in 2023 versus $19 million in 2022. And stock-based compensation costs are about $3.7 in 23 and 22 for your information. And what drove this? Essentially, we spent less than employees. We had shrunk the team as part of the transition. That saved us about $1.4 million. Legal costs were less intensive and decreased significantly, so that dropped about $1.1 million during the year ending 2023. And a lot of that was related to just less development activities as we were really focusing on energizing and ramping up sites, and capital raising activities. So just the amount of legal activity was more reduced as we were focused on operational activities. Consulting and professional services, about $1.6 million reduction as well compared to the prior year. Investor relations increased here. We focused a lot of our energy last year, and we'll be doing some of that this year as well around investor acquisition and influencer marketing programs to bring more shareholders to the company to help us to grow and find interest, and that has been very effective for us as well. And there's probably about $700K other areas where we save money. Net is we've been highly focused on reducing our costs, increasing our profitability to help us to focus our cash investments on the growth of the business. Let's talk about adjusted EBITDA and revenue. This is one of my favorite charts. If you look at the revenue growth, we talked about its pretty sizable or significant improvement over the last several quarters of 2023. The second half was meaningful growth, again driven by the ramp up of our sizable facility, and as we double that facility, you can start to see the picture going forward. What's exciting is that the adjusted EBITDA also improved. In Q1, we were losing about $2.9 million in adjusted EBITDA. By Q4, we were positive over $1 million, up from Q3 of $400,000. So we're definitely heading in the right direction. Again, this is a way for you to see that the business model does work as the company begins to scale. If we keep our fixed expenses, our sort of G&A operating expenses, fairly flat or in line with that relative growth and scale of our assets under management, we can start to become more and more profitable as we build out these facilities. So that's a key focus for our business going forward, but it's very exciting to see this all coming together. And last but not least, let's take a look at our comparative balance sheet highlights. last year, 2023 versus 2022. Cash was up significantly. Current assets were up significantly. So as we entered the third quarter, we made continued improvements in our balance sheet. Our overall assets improved about 10.7% since last year, with a growth of almost 10 million in assets, and most of that asset growth has been cash. Total cash included unrestricted and restricted in that 10 million as of September 30th, and compared to 1.8 million at the end of the year for that same period. So in addition, we deployed over $20 million in assets in Dorothy 1B for the third quarter of 2023, and all of these assets are now in use at the company and have been a big contributor to the material growth in our revenue and profit last year. So this is all, fantastic results overall. I'm again honored to be leading a team that can create these results in just under a year, focusing heavily on executing, dealing with an innumerable set of challenges. Our team has been working with a host of our investment partners to scale the business and look for new ways to grow the company. We've put into place agreements with our note holders to help to restructure that debt and also finance the company. There's a number of things that we got done during the period that many believe we would not be able to do, and I'm honored to say that we were able to do that, if not but for the patience of you, our shareholders, and our investors, and I want to thank you for that support, and look forward to telling you new and exciting things happening in 2024. And I want to thank you for taking the time to listen to this presentation, and I encourage you to download that 10K. It's a much better read, and also download this presentation. There are more slides that I didn't record over that you can read that go into some operational highlights for 23 and 24, some detailed views of our different sites and insights on the pipeline, etc. Thank you, and thank you for being an investor in Soluna. Until next time. And don't forget to connect with us on LinkedIn and Twitter, also known as X these days. Stay up to date on the latest from our company. We have over 1,500 people in our newsletter. We want to encourage folks to sign up for that as well. Just follow the links on these slides, and look forward to talking soon. If you have questions, we do FAQs that you can find on our social platforms. We're also on LinkedIn as well. Just search the Soluna Holdings page and send us your insights and questions. And again, thank you for taking the time.